And here we go, guys. We're getting ready for some big moves in the space for Bitcoin. We've seen Bitcoin hit 26K today, and we're going to jump into the data of the charts, take a look at what's going on and all that wonderful stuff. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. I don't think you'll be disappointed by what you find down there, so go ahead and check it out. Let's jump right down into this one. So we've seen Bitcoin surging up today. Okay, this is on the back of inflation in the US coming down at 6%. Okay, so we can see that we've broken the 26K as that US inflation data has come through. Now, what's really interesting about this is that there's so many different ways that the Fed can take this now. Okay, there's kind of three different options, the way that I see it. And I think as a lot of our members as well down in a Discord server also kind of aligned to this. I think one name was 𝗕𝗘𝗪𝗚, kind of illustrated this quite well in a Discord server earlier. Essentially, they can either stick to plan and just do a pretty basic, neutral, nothing, no change, or go kind of like, 2.5 or 0.25 of rate hike, something to that effect. They could, of course, go, complete degen and just, let inflation kind of run rampant by pivoting, right? That's also a possibility. Alternatively, they go and do something absolutely insane as well and stick to their guns and go 0.5, right? These are kind of the three things that I think are likely to occur, and I think a lot of our members kind of agree with this. Now, let's kind of think about that, right? So if they sit back and do nothing, then that's probably the smartest play, I think, at this stage. Let's say the smartest play. It's probably the safest play. It's probably the safest one to play on. And that basically means no rate hikes, no pivot. Just let's see how things go, and we'll keep an eye on things. Now, in doing so, I think actually what that's inadvertently going to create is a spike in inflation. Now, they're kind of starting to get a bit of a wiggle on in terms of combating the inflation. We can see that, and to ease off now potentially might actually do more damage than good. Vice versa, if they go for 0.25, it's expected, it's reasonably neutral, maybe that's all they do and they continue this fight. Again, they'll be negatively impacting the banks a little bit, but again, it's business as usual. Alternatively, doing a pivot could create massive inflation spikes further down the line, and could also mean that we're going to be in a prolonged bear market for a very significant period of time. We might spike up to 30, 40K Bitcoin temporarily, but essentially no new all-time highs potentially on the horizon, as inflation would run rampant and they would have to be very aggressive with their interest rate hikes, which again will basically incentivize people to holding USD. So I think we have to kind of be really aware of that. And of course, if they do go really aggressive at 0.5, then they're going to have more problems with people making a run on the banks potentially going into financial difficulty and collapsing, and so forth. So there's going to have to be quite delicately handled. It's going to be interesting to kind of see how it plays out. I definitely don't want to be a US citizen right now. I don't think it's going to be overly pleasant either way that the Fed decide to go. So keeping a close eye on that. So US inflation down to 6% from 6.4. Interesting stuff. Now, obviously, on the back of that, we've seen an overreaction in the markets. We saw a push up from the kind of 24, 23K area up to the 26K area. Now, the big takeaway is right down here, bottom right-hand corner. If I expand this up, you can see it right here. We are overbought on the weekly, overbought on the daily, overbought on the 8-hour, 4-hour and hourly charts. Basically, essentially, we've exhausted these markets from the stochastic RSI perspective. Now we can continue to push up a fraction or hover around these highs for a little bit longer. We're only just up in the overbought area on the daily, can be up there for several days yet. So just kind of keep that in mind. Do expect some volatility on the smaller timeframes though, but essentially this is not looking positive on the smaller timeframes or the macro timeframes. Just kind of keep that in mind. Now, on this hourly chart here for Bitcoin, we can see all of these fair value gaps that have been left behind on this recent move upwards. Again, these are things that will have to come back down. We zoom out further. You can see a few were left down over here, but all the ones that were left over here, they've all been filled. Chances are these will get filled as well. Okay, so it's going to be interesting to kind of see how these kind of play out. Now, we do have that bullish change of character. We've pushed up. We usually expect these things to kind of cool off back down. Likewise, we see here, change of character, we pushed up, and then we started to see this bearish change of characterization on our hourly chart to the downside. We've now broken that. We're bullish, at least on the smaller time frames. Equilibrium is definitely a glaring area that I do think we're going to be pushing down towards at some point. Interestingly enough, we have a weak high, which means we can still push a little bit higher than our existing high at the moment, which I think comes in at 26,386 USDT apparently. So we're still right up in that high ranges. Now, as I scale this up to our daily chart, this is where things start to really get interesting. Where we close today's candle, this daily candle, is going to be very, very pivotal as to whether or not we keep this change of characterization printed on our daily chart. This change of character on the daily does actually give us a ground to think that we might be short-term bullish, although sometimes we get false flags. Okay, so we're going to have to kind of see how this kind of goes. Now, as I've said many times before, and on our Smart Money Concepts course, 𝗕𝗘𝗪𝗀𝗪𝗀𝗀com, linked in the description down below, we like to get confirmation. Change of character is great. A break of structure after a change of character is confirmation that we're moving in that direction. Some examples are change of character here, break of structure here. Okay, over this side, we haven't seen any break of structure yet because we'd have to move up quite significantly. We'd have to kind of move up, probably gonna have to move up. It's gonna be a tough call. I'm gonna say 33, 34, maybe even push it up towards 35 to really get that break of structure confirmation. But it'd be interesting to kind of see how that plays out. Ultimately, we have got these fair value gaps that are left behind, and we basically are pushing up into the ranges that I was talking about probably about a month ago, $27,000, $28,000. This gap right over here, and it just so happens to be that we're coincidentally moving up in that particular direction right now. So interesting stuff. Are we going to fill that gap out and then reverse down? Like I said, we should be very aware that our stochastic RSI is not looking overly brilliant down in that bottom right hand corner, where we are looking exhausted to the upside. We can push up a little bit more, but there isn't terribly too much more to go. Specifically when we start thinking about how much that weekly has to go down, the daily has to go down, and 20 hour, 16 hour, 12 hour, etc. There's a lot of room to the downside to be had here. So we have to be aware that the move to the upside is not necessarily as good as we want it to be, because we're not kind of really rallying from a good foundation level. Now, we know that we were expecting a bear market rally from the lows, so we have moved up quite aggressively, a lot more aggressively than we were first anticipating. So I'll take that one on the chin. That was definitely my bad, maybe being a little bit too hawkish when it came to how high this thing could potentially go. Now, the DXY drove a lot of that initially. If I come up to our daily on our DXY, okay, so the DXY really did aggressively drop to the downside, right? And then we started to see a correction to the downside only really when the DXY went up. So Bitcoin was going down while the DXY goes up, and Bitcoin goes up when the DXY goes down. So you can see here that there's been a small movement in the DXY, but actually a much bigger spike to the upside on BTC. So we definitely are seeing some FOMO action and some compounding with US banks, potentially people looking to kind of move out of dollars and going into Bitcoin, for example. There's definitely elements of that occurring. So we have to be aware that there's a lot of various different factors that are taking place here that has never happened in Bitcoin's history before, right? So we have to kind of consider that there's going to be a whole host of things that are going to occur that we're going to have to really scrutinize quite difficult or quite in a lot of detail. That's probably the best way of kind of saying it. Like, a lot of things are going to happen, and we're going to have to scrutinize them in a lot of detail to really get a good grasp over what is going on. What we don't want to do is we don't want to trick ourselves into thinking that history is repeating itself when we know that there's a lot of different variables that are occurring that haven't occurred before. I've been through this a dozen times already on the channel over the last year, and I don't really want to go into a lot of them right now, but essentially the idea here is that we've done some things that were never done in previous Bitcoin history, and therefore we're writing new history with new variable data. That data is going to be key in understanding what is going to happen as we progress further forward. But as we are writing this data, it's hard to really rely on it just yet until you get a good anchor for it. So we're going to really have to scrutinize it. Ultimately, my big issue that I have with everything that is going on at the moment is that essentially we haven't really got institutional level investors coming in. All we are really seeing is a lot of retail FOMO and retail wallets increasing. And this is quite alarming, because I don't think we really have the ability as retail investors to push that needle up to those really significant levels that we want it to go to. So we have to be really cautious here. At least in my opinion, we have to be really cautious, because if we're not, we could potentially find ourselves in one of the biggest bull traps of all kind, right? And we can see this kind of aggressive movement to the upside. It definitely isn't looking overly natural in the way that it is moving. Specifically, when we start thinking about how banks are restricting movement of funds, it's really, really difficult to think that a lot of retail investors are able to move the needle like this. So this actually, to me, looks more like market makers kind of, riding things and pushing the needle and pushing the price in the direction that they're looking for. But I do think, however, this is all going to be short-lived. We can potentially ride this for a few more days, maybe another week or so, but I don't think there's terribly too much more in the tank after that. It'll be interesting to see whether we can push up towards the 30K, and the main area of resistance really is going to be, in my mind, the 27-28K ranges. As you can kind of see, we can push up into these higher ranges, but this is the area of consolidation that, again, we haven't really tested to find whether or not this is going to be our resistance lines. You can kind of see right here, we're kind of looking at this particular wick right here, and over on this side, we're kind of approaching that area. This particular low comes in here at 26,700, right? And so although we've moved up to 26,386, I wouldn't be surprised if we hit 26,700 and we've confirmed that there is our resistance. We've just grabbed a load of liquidity at 25,250. So again, a lot of short people, short positions have been squeezed, not people, but short positions have been squeezed. So a short squeeze has definitely occurred here. And I do think there's going to be a long squeeze, if such a thing exists, terminology-wise, that's going to occur. We're going to see some resistance up in this range. So we just want to be prepared for that where possible. Now, as I come and scale this up into our weekly time frame, we do want to reflect on this Gaussian channel. This Gaussian channel is something that I used to talk about an awful lot during the test of this area in December of 2021. There was one candle on this weekly time frame right here that has me really nervous at the time. We closed inside it, which should have been a bear signal, as in we should have been going down at that point, but we closed above it the week after. I think this is basically as a confirmation. It doesn't really matter so much because this is the first time that this had ever happened in Bitcoin history, right? That's never happened before in Bitcoin's history. So we know that this was an anomaly that we couldn't find anywhere else. But I think ultimately my takeaway here is the second that we close inside here, we're going down into a bear market. Okay, and then of course we can see that we're already testing these areas, tested that midline, and then we broke to those. Once we kind of broke out of this low area right here, we were confirming that we were definitely going down. That was May 2022. And then of course we can see that right now we're testing the opposite. We're basically looking for a closed position inside the Gaussian channel. If we close inside this Gaussian channel, we might have a brief correction now, but I still think we're actually then going to be looking at that progressive move to the upside, which again doesn't really support the idea of what the whales are doing. So it's going to be one of those. Where does this weekly candle close? Is it going to close inside that Gaussian channel or is it not? Essentially, we need to close above $23,000 if we want to see this with a closed position inside that Gaussian channel. Now, if I turn the Gaussian channel off, we can throw in the EMAs. At the moment, we can see that the 50 EMA, which is the white line, was acting as our resistance. We are trying to fight our way above this at the moment. Likewise with that 200 EMA. On this weekly time frame, this is a huge indication that things might actually be finally getting a bit of a turn in the market. But we can't rely on it solely. For a clear example, we can see over here, we closed above this to this 50 EMA. Only to then come down and reverse, right? So it's not a huge indication, but it's one of the things that we'll be looking at and using that in conjunction with everything else. The big issue that I do have, not only are the whales not buying, we're heavily overbought here, so do expect price to come down, okay? Not expecting price to go up. We obviously still have our fair value gap on this weekly time frame. It's the only one on this weekly time frame with the Binance stamp. Or the Binance time frame, I should say, or Binance exchange. We can see down here, this is basically 17K on the low side and 20 on the high side. In my opinion, this has to be filled before we can move up. So we are looking down. Whether then we have to come down into new lower lows, I speculate that we do because of the whales not buying, but there's no guarantee of that. Essentially, I think what we're looking for is retail to sell or to come out of their positions, and we're looking for this gap to get filled, and we'll be testing these lows, whether that's 17K or maybe even 14K, right? I do think 14K is something that we have to consider. Let's go ahead and actually jump down into that, right? So if let me clear this out, this is actually the range I had highlighted before, 26,888, 27,979. That's from about a month ago. maybe a little bit longer than that. That has been hovering up there pretty much, I think. Yeah, February, late February, we're probably talking about that one. So this is the range that we're heading towards. Now, if I take this to our daily time frame, it's our Z wave that is now being questioned. Not only is this something that we need to kind of consider, we need to consider whether or not we are in this X wave or not. Okay, are we just actually finishing at this Y, or are we in an X wave altogether, right? Now, we can see up here, we have the higher highs and the higher lows. All we've done at the moment is test those higher highs on this parallel channel. So essentially here we just tested the highs. Are we going to move back down? It'd be interesting to kind of see. As I often say, guys, if I zoom out of this, higher highs, higher lows break down, and lower lows and lower highs break upwards. Okay, we can see this in a bull market up here. Lower lows and lower highs break up. Lower lows, lower highs break upwards. And in the bear market, higher highs, higher lows break downwards. Okay, these are fundamental basics. So if we start thinking about these things and we start thinking, okay, well, here we have a much bigger channel. It's not a guarantee because I'm trying to make it fit, if I'm being brutally honest. Then if we are trying to make this fit and we're trying to kind of draw this in, then we are testing the higher range and expectation should be down. Now, also, we should note that on our weekly time frame, if I pull this up into our weekly, just over here, okay, we take a look at this. The last time we were testing the upper range, we were overbought on that weekly time frame, brought us into the new lows. The time before that, again, we were testing the upper range before we fell down. Likewise, every time this weekly stochastic RSI has been high, we've been testing those lows, okay? So we want to kind of consider those things and what they might mean. Now, if I take that off, throw in our divergences, we can see there's no divergences occurring here on the RSI. The RSI is also on this weekly almost overbought. Jump into the daily. Again, we had some bearish divergences recently, and again, we saw that move to the downside. We're right back up on the high side on that daily RSI as well. No divergences being indicated here, but we should be aware that things are not looking overly great. We had some hidden bullish divergence that took us up to that higher range again, but again, not looking overly positive there either. So ultimately here, I think that we should be aware that things are going to be coming down because we cannot move up continuously. What's going to cause it? Who knows? That's not really what I'm here for. Do I still think, though, that we are seeing $16,000 to $10,000 Bitcoin? It does change things a little bit because the higher that this is pushed, it does reflect and change where we think our lows can be, right? And because it's all relative to our W wave. So if I take the W wave from here, and I move this over to the existing high of 26,300, then of course we have to adjust our actual lows here just a little bit. Not terribly too much. It's 16,666. That's an awful number. Down here to the low of around 10.5. So it's still right inside that range. It hasn't changed terribly too much. Now, where would that invalidation level be? I think if we wanted to kind of invalidate this idea of a Z wave, then we have to push up higher than $32,917. That X wave would have to go up there. Okay, now, is that possible? Sure. Everything's possible. Is it likely? Is it probable? No, I don't think so. But it'll be interesting to kind of see how it plays out. Ultimately, if we were to kind of reflect on everything that is going on inside all of this structure here, then we will actually have the potential to push up a little bit higher. We could push 30K pretty easily, actually, in fact, and just from counting the waves. If we were to ignore the stochastic RSI, we could basically say, oh, look, we can definitely do that kind of 32K kind of push. However, I don't think that's really something that we could consider. I think actually what might be occurring here is a flat correction, and that would be rather interesting to kind of see how that plays out, because if the X wave has finished at that 25,250, and what we're actually going to be getting an irregular flat, that's the one, then we'll be testing those lows around 17K. Then we push up and then we finish it, because a flat correction like this could just be an interesting point to kind of get us into those lows. And if we do have that overextension with it, then I think things are going to be very, very interesting indeed. Now, there's no guarantee that we have an irregular flat. It's far too soon to be really confident on that kind of stuff. But it'll be interesting to kind of see what forms after we kind of start to see a bit of a reversal here for BTC, which obviously will have an impact on all the altcoins as well. As much as I want to see this as a bull market, I first of all have to see 32,900. And like I've often said, guys, it doesn't matter whether or not you're trying to catch the falling knife or whether or not you are trying to just kind of dollar cost average your positions. Ultimately, what you want to do is you want to get confirmation that you're in a bullish market or in a trend to the upside, and then you can buy the dip afterwards. So All of this move to the upside at the moment is great, but we haven't confirmed it is a trend yet. Okay, so we can't get too carried away. I'll be looking for the corrections. I'll be dollar cost averaging into the Z wave, as I do think that is the most likely scenario. As we kind of correct down on the weekly, daily, 20-hour, 16-hour, 12-hour, 8-hour, 4-hour, and 1-hour charts, chances are that we will be looking at some pretty decent prices. And I think dollar cost averaging this last move seems to be the most logical one in my humble opinion. I'm going to leave the video there though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Guys, join us down in Discord. Check it out. Linked in the description down below. I don't think you'll regret it. Until the next one, have a fantastic day.